The Elon Bitcoin receipt is not a tweet. It is a balance sheet. That is the whole frame for this weekly rebuttal. Because whenever Elon Musk and Bitcoin show up in the same sentence, the internet immediately does what the internet does. Half the room treats it like a prophecy. Half the room treats it like a circus. Dogecoin jokes, Tesla memories, SpaceX hype, personality arguments, fan wars. So today we are going to do the opposite. We are going to put the personality to the side and read the receipt. The strongest skeptical case is simple. Elon-linked Bitcoin is not a serious monetary signal. Tesla bought Bitcoin in 2021, stopped accepting it for cars, then sold a large chunk in 2022. Musk talks about Dogecoin. Tesla is an electric car, energy, robo-taxi, and robotics company. SpaceX is a rockets, Starlink, satellite, defense, AI, and Mars company. Their Bitcoin holdings are small relative to the ambition of the businesses. So the skeptic says, do not confuse celebrity with conviction. Do not confuse corporate treasury accounting with Bitcoin adoption. Do not confuse Elon headlines with monetary truth. That is a fair steelman. And it has receipts. Tesla did not behave like a pure Bitcoin treasury company. It behaved like an operating company that bought Bitcoin, used some of it as a liquid balance sheet asset, and later sold most of the original position when management wanted cash flexibility. If you are looking for religious consistency, Tesla is not strategy. It is not trying to be strategy. The same goes for SpaceX. SpaceX is not a Bitcoin company. It is not selling a Bitcoin yield story. It is not asking investors to value it on a Bitcoin per share metric. SpaceX is an operating company trying to launch rockets, operate Starlink, build infrastructure, and fund enormous capital needs. So if the claim is Elon companies prove Bitcoin is inevitable, slow down. That is too easy. It turns a serious balance sheet detail into a meme. But here is the rebuttal. The fact that SpaceX is not a Bitcoin company is exactly why the filing matters. Buried in SpaceX's S-1 is a simple disclosure. The company says its digital assets consist of Bitcoin. The filing shows 18,712 units of Bitcoin with a cost basis of $661 million. At year-end 2025, the fair value was listed at $1.637 billion. That is not a tweet. That is not a laser eye profile picture. That is not a conference chant. That is a balance sheet. And Tesla's latest quarterly filing shows the same pattern in a different form. As of March 31st, 2026, Tesla reported digital assets with a fair value of $786 million. And the footnote says the majority of those digital assets were 11th and 9 units of Bitcoin, held at an acquisition cost of $386 million. Put Tesla and SpaceX together, and the disclosed number is 30,221 Bitcoin. Again, this is not a buy signal. It is not an Elon signal. It is not a stock recommendation. It is not even proof that either company understands Bitcoin the way a self-custody holder does. But it is proof of something quieter. Bitcoin has become a treasury asset that can sit inside the financial statements of companies whose main business has nothing to do with Bitcoin. That is the piece people underrate. Strategy is loud. Strategy is explicit. Strategy built an entire capital markets machine around Bitcoin. You can agree with it, disagree with it, love it, or hate it, but nobody is confused about what strategy is trying to do. Tesla and SpaceX are different. Their Bitcoin is not the whole story. It is not the product. It is not the brand. It is not the daily press release. It is a line item. And line items can be more revealing than slogans, because if Bitcoin only mattered inside Bitcoin native companies, that would be one kind of adoption. But when a car and energy company and a space and satellite company both keep Bitcoin on the balance sheet, the question changes. It is no longer, can Bitcoin companies hold Bitcoin? Of course they can. The better question is, why do companies with completely different missions keep finding room for Bitcoin at all? The answer is not that they need Bitcoin to run a factory or launch a rocket. The answer is that Bitcoin behaves unlike the rest of the corporate treasury menu. Cash is liquid, but it can be debased. Treasuries are liquid, but they are someone else's liability. Corporate bonds carry credit risk. Equity stakes carry business risk. Bitcoin is volatile, but it is a bearer-style monetary asset with a fixed supply schedule, global settlement, and no issuer promising to make you whole. That does not make it automatically better for every company. It makes it different. And different is enough to explain why it keeps reappearing. Now, the bears still have real points. First, corporate Bitcoin is not the same thing as your Bitcoin. If you own Tesla stock, you do not own Tesla's coins. If you own SpaceX stock, you do not control SpaceX's coins. You own a claim on a company with management, boards, capital needs, legal obligations, debt, dilution, and business risk. The Bitcoin sits inside that wrapper. Second, operating companies can sell. Tesla already proved that. If management needs liquidity or wants to reduce volatility or has another capital priority, the coins can move. A filing can show conviction today and optionality tomorrow. Third, celebrity can distort the analysis. The same facts would matter if the filing belonged to a boring industrial company with no social media army. If your argument depends on Elon being Elon, it is weaker than you think. Fourth, the holdings are meaningful but not dominant. SpaceX's Bitcoin position is large in Bitcoin terms, but the company is not valued primarily on Bitcoin. Tesla's Bitcoin position is visible, but Tesla's core valuation still comes from cars, energy, autonomy, robotics, software, margins, and investor expectations. So the bearish warning is correct. Do not turn an operating company into a Bitcoin proxy just because the balance sheet has coins on it. But the bullish rebuttal is also correct. Do not ignore the balance sheet just because the company is not Bitcoin native. That is the real receipt. The old Bitcoin adoption story was loud. Exchanges, miners, crypto funds, strategy, dedicated treasury companies, people who wanted the market to know exactly what they were doing. The next adoption story may be quieter. Companies hold some Bitcoin because it solves a treasury problem, or creates optionality, or diversifies a balance sheet, or gives them exposure to a monetary asset that cannot be printed by a central bank. They may not make it the headline. They may not build a brand around it. They may just file it. That is why the SpaceX disclosure is more interesting than another Musk tweet would be. A tweet can be deleted, a meme can fade, a filing becomes part of the record, and the record says this: one of the most important operating companies in the world disclosed 18,712 Bitcoin, with a cost basis measured in the hundreds of millions. Tesla disclosed 11,509 Bitcoin. Together, the number is more than 30,000 Bitcoin across two Elon-linked operating companies. Now pause on that combined number for a second, because this is where people will be tempted to overstate the case. 30,000 Bitcoin is a serious stack, but it is not the same kind of stack as a sovereign treasury. It is not the same thing as coins in cold storage where you control the keys. It is not even the same thing as a company whose whole strategy is to accumulate Bitcoin and report Bitcoin per share. It is operating company Bitcoin. That category matters because it has a different meaning. Operating company Bitcoin says, management decided that some amount of corporate capital can sit in a monetary asset outside the normal fiat stack. But management still has a business to run. Rockets fail. Factories need cash. Debt markets move. Shareholders want returns. Boards make decisions. Lawyers write risk factors. Accountants fair value the asset every quarter. So the clean way to read this is neither Elon is secretly orange pilling the world, nor this is irrelevant. The clean read is, Bitcoin is now legible enough that enormous operating companies can hold it without the entire company becoming a Bitcoin company. That is a new stage. Early adoption was ideological. Then it became retail. Then it became exchange and fund infrastructure. Then it became strategy-style treasury engineering. The next stage is boring on purpose. Bitcoin is one more balance sheet instrument that a CFO, board, auditor, custodian, and investor relations team can process. That sounds less exciting than a viral tweet. It is also more important. Again, no worship, no dunking, no buy call, just the receipt. The skeptic is right that this is not pure Bitcoin conviction. It is not self-custody. It is not a cypherpunk manifesto. It is not a guarantee that the coins never move. But the skeptic is wrong if he says it means nothing, because Bitcoin does not need every holder to be ideological. Gold did not become a reserve asset because everyone who held it loved gold Twitter. Dollars did not become corporate cash because every CFO loved the Federal Reserve. Treasury bills did not become standard because treasurers have emotional attachment to government debt. Assets become standard when institutions can explain why they belong in the stack. That is what this filing does. Quietly. It says Bitcoin can be held by an operating company, it can be custodied, it can be measured, it can be fair valued, it can sit next to cash, securities, equipment, equity investments, and everything else the company uses to tell investors what it owns. That is not the finish line. It is not even close. But it is not nothing. So here is the honest scorecard. If your claim is Elon proves Bitcoin is going to the moon, that is hype. If your claim is Tesla and SpaceX are the same thing as holding Bitcoin yourself, that is wrong. If your claim is corporate Bitcoin holdings have no signal because companies can sell, that is too dismissive. The better claim is narrower and stronger. Tesla and SpaceX show that Bitcoin has crossed from internet money into corporate treasury language. Not as a meme, not as a personality cult, not as a perfect substitute for self-custody. As a line item that serious companies can disclose, value, hold, and explain. That is the signal. And it is more durable than a tweet. This is exit velocity. Read the receipts, ignore the costume drama, think in Bitcoin, educational only, not financial, tax, or legal advice.